validation, now I validate myself. Building inner strength, putting doubt up on the shelf. No more unnecessary drama, no more wasted time. Climbing higher constantly, making my own climb. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. Whoa. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield.
How you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. I got a lot of information for you guys today. I told y'all I was going to do it. As we just finished talking about everything that happened with the tariffs negatively impacting Hong Kong and China just yesterday. So today was the day I told you guys I was going to grab a few things that you guys can invest in here in 2025 during the tariff melee. And I grabbed a lot of stuff that you guys can utilize. So we're going to be talking about that throughout the show. Make sure that you guys like and subscribe. Hit those reaction buttons as you pass through. If you guys wish to talk on the show, you guys can do so by clicking that link, approving the mic, approving the camera to bring you on in real time. Got to be over the age of 18 to do that part. Otherwise, you can remain in the comment section. If your comments are appropriate, they do come up onto the screen as long as I can keep track of the comments. Special shout out to those of you that's watching us on Twitter X or Twitch. Red Void and Omni81. I see you guys. If in the event that you guys have any comments, because I know you guys are used to just watching, if you guys have any comments, your comments will also go up on the screen as well, as long as they maintain appropriateness. So make sure that you try to do that. We do got a couple of people that are under age of 18 to come here trying to learn how to invest and spend money and make better decisions. So just remember to keep your comments respectful to those individuals that should remain pure for as long as possible. Note that we're live 7 nights a week. We don't let the sun rise without going live. So we make sure that we're here every day, even if we are a little bit late, operating on CP time. We're supposed to start the show every night at around about 10 o'clock Central Standard Time in the PM hours, which is about 11 o'clock Florida time, 7 o'clock California time, 4 a.m. Green Minutes time, or 4 a.m. Universal Standard Time. But for some reason, we find a way to start 30 minutes to an hour late, but we're always here. We're always here. Trying to break the trend, but daylight savings time is not my friend. Not much I can do about that. Nevertheless, I know you guys came to try to learn some stuff about some stocks. I know Bayside's got to be lurking right now. I see you. Special shout out to Bayside. Special shout out to Usman and Mr. Satellite, because I know Mr. Satellite's going to double back up in here real quick and do his special presentation. Oh, and speaking of, for all y'all, the first time on the show, y'all decide to drop into the comment section. I see you in the comment section. Give you a nice little intro song while you come in, and special shout out to you on your way in as you give us your first comment of the night. So just note that that's a thing. Later today, early tomorrow, we're going to be putting up the country of the week. I think we're going to go ahead and just talk about Ukraine next this Wednesday so that we can pass through. We just finished talking about Ethiopia last week, and YouTube flagged it, talking about you can't talk about Ethiopia. I'm like, bro, I talk about Ethiopia and Laos, and I talked about investments and stocks and real estate, and they flagged it because it's Ethiopia. I'm like, bruh. First Amendment ain't First Amendment these days. But, I got the right to say whatever I want. They just don't got to pay me for it. So I understand. But I just let it ride. I let it sit there. It's under review right now. They might undo it after the show. It's like a 2-hour show. I don't know anybody who's going to sit there and watch a 2-hour show. They might watch the first 20 minutes and be like, ain't nothing wrong here. Either way, let's dive into the high stakes world of investing in 2025, where the tariffs are rewriting the rules of global trade and shrinking under financial markets. We're looking at the biggest upturn since probably the 90s, with President Trump sweeping tariffs policies now in effect, including a baseline 10% tariff on all U.S. trading partners and even steeper rates for countries like China that is now somewhere between 104 and 145%. Investors are navigating unpredicted volatility and uncertainty. Normally, people start switching over to precious metals when it starts getting this volatile, but these tariffs have triggered sharp market swings, with the S&P dropping over 10% in just 2 days after April 2nd's announcement, and the global GDP growth forecast slashed to just 1.4% for the end of 2025. Tariffs are more than just political headlines. They are a direct tax on consumers and businesses, raising prices on everything from groceries to electronics. So analysts project that Trump's tariffs could reduce U.S. GDP by 8% and reduce wages by 7%, with the average middle income household facing a $58,000 lifetime loss. I don't know. Y'all might not think that $58,000 over the course of a lifetime is a lot of money, but that's a lot of money. Some of y'all, that's like 2.5 years of income. The ripple effects are global. China's growth forecast has been cut, and retaliatory tariffs are sparking fears of worldwide recession. For investors, this means that understanding which sectors and ETFs are positioned to weather the storm, or even if there are any tariffs that you can benefit from, ETFs that you can invest in that you can benefit from during the tariff times. Now, these changes are more crucial than ever. So I figured we could just dive right into it, because like I told y'all, today we're gonna briefly talk about as many of the ones that I found that I think is pretty good for you guys to get into. Some of these tariffs, not the tariffs, but the ETFs and the landscape that is shifting the response to new tariff regimes. That's what we're focusing on. We're trying to focus on the current tariff regime. Now, I understand that based on the way things are going and all the tariffs that have been imposed on everybody is only supposed to be running through the time that he sells TikTok, doesn't change the fact that we're going to still be dealing with the fact that these tariffs are a pain in the butt. So we're looking at ETF categories such as domesticality and small cap. So domestically focused small cap companies that are less expensive to global trade, which benefit from buying American sentiments. These are going to be notable ETFs is iShares Russell 2000 ETF, which has an IWM ticker on it. You have consumer staples and utilities, where this is a defensive sector, steady demand even in the downturn, and consumer staples select sector SPDR is XLPs. So as I told y'all, Satellite is in here. We said he was coming and he is here. Mr. Satellite, back to the 60s time. He's showing up more often than John Cena wins championship. He's dancing on top of the ladder of ladder feet.
Used to chase validation, now I validate myself. Building inner strength, putting doubt up on the shelf. No more unnecessary drama, no more wasted time. Climbing higher constantly, making my own
really appreciate you showing up, Mr. Satellite. As we
standing on higher ground.
I love that part. All right, we got to get back to the show.
Raising the bar, breaking ground.
Okay, so back to it. U.S. energy and financials has higher domestic demands, potentially for rising rates. So this ETF is Energy Select Sector SPDR. Its ticker is XLE. That one's actually pretty good as well. So you have XLP and XLE. If you didn't catch the one right before Mr. Satellite jumped in, there is a U.S. steel and material where tariffs protect domestic producers. So Van Eck Steel ETF, the ticker is SLX. And Van, VANECK Steel ETF. That one's ticker again is SLX. That's a good one to go for right now. Safe Haven Asset. They're hedging against volatility and inflation. So you have an SPDR Gold Trust that's called GLD. You have an Invesco Yen Trust called FXY. Those two are also good to get into. High quality U.S. stocks that are focused on companies with strong balance sheets and earnings consistency. And you're looking at iShares MSCI USA Quality Factor ETF. That's called QUAL. That's the ticker for that one. And then tech ETFs on tariff pauses, where tech rebounded sharply after tariff pauses but remains volatile. You have SPDR SNP Semiconductor ETF. Ticker is XSD. Now, don't think I was just going to sit over here and talk about the U.S., because the U.S. is not the only place that we've got stuff going on. And here we go. We've got Rev in the house. Throw down for Rev.
My network is my network. Choose your company wise. Surround yourself with eagles.
Rev's been coming in just about every day as well, alongside Mr. Cadillac. We're looking to see Bayside and Eastline jump in today, so that we can see what all we can grab off this list.
That's my personal command.
It's kind of like say, game, for today so we can blast music the record. Oh yeah, anybody who's trying to record the music, y'all need to jump up here and get in.
My network is my network.
He's right. Each time one of y'all jump in, we're gonna have the album jumping. Make sure that y'all like and subscribe and potentially hit the reaction button as y'all fly through here. Let no people know that we still here.
That's my personal command.
Oh, I love this part. This is usually when that's usually when Mr. Satellite dives in right before the guitar solo drops off. Now, the best ETFs by country as of April of 2025. So we grabbed a few countries as well, and we're going to be talking about those today. Starting off with China, they have Krang Shares Hang Seng Tech Index ETF. That's a lot. I'm gonna do this because y'all know, if y'all are watching us from YouTube, y'all gonna get these in the comment section, because I know when I said it, y'all were like, what? Say that again, spell it for me. I got you guys over there on Twitter and Twitch as well, so y'all are gonna see it. Because yeah, that was a pretty long name. The ticker for that one is K-Tech. It's a K-Tech with a 39% interest rate. I think that's pretty interesting. So that's one of the ones. We got plenty of them now, but I figure spelling this for you, might as well just give it to you. We've got the next company here. That's Core Value Alpha Greater China Growth ETF. This is another one that's actually pretty good for you guys to invest in if you're investing in China's ETF stocks, because we also got some from other countries. So don't think that these are the only two countries that we're doing. We're going to give you guys the ticker. The ticker is CGRO. So you know, and you'll be able to find some of these and put your cash in them. These are the ones that are doing good during the tariff uprise. You have another iShare MSCI China ETF, and this one is for broader China. It's raising 35.4%. So you guys might have an interest in this particular one. These are the simplest ones to grab, as a matter of fact. And while I'm doing it, we've got like 3 more for China, just for China. And I tell you what, after China, we got Romania. I made sure I went and found some information for Romania, because Danny Stefan is in Romania, and he's been following the show for almost a year now, and he's been asking me about some ways to improve things financially. And I was like, man, let me go dig up some stocks. I want y'all to be ready. So this one is for Investco China Technology ETF. Its ticker is CQQQ with a 36.21% return on investment. It's a Chinese tech sector. The next one is Wisdom Tree China, ex-state-owned enterprise. That's actually pretty nifty. It's got a 24.74% interest rate. Its ticker is CXSE. And so is oh no, the other one is CQQQ. Oh boy. I'm wondering if they've got an ETF out there that is like KKKK. I just wonder. Just want to see. It would be interesting. I probably would invest in the stock just because nobody else will. But this next one here is an SPDR S&P China ETF. ticker GXC with a 28.9% interest return on broad Chinese markets. So that's something that's really good for you guys. And then I told you that we were going to get into some of the other ones because we have ETF providers that are exposed to China's tech, consumer, and financial sectors, with FXI and MCHI being especially popular for broad market trends. And that's what leads us to Hong Kong. We can invest in this stuff over here with Hong Kong. Hong Kong has another one, but I think theirs is different. Nope. Actually, let me double check now. Oh no, that's from the Hong Kong sector, not from the Chinese sector. So you would think that China and Hong Kong are the same, but they're not. So giving you some information from the Hong Kong sector, you'll be able to take a look at Crane shares, Sing Tech that I told you guys before. China's got another one that is Global X Miscellaneous. That's what it looks like. It says MISCI China Financial, and that's going to give you a ticker of CHIX. This one's running at another one that's running at 39%. Well, actually, that one's the last one running 39%. This one's running 30.9%. So got to be careful when you're looking at some of these ETFs because they look the same. Some of them look the same, but they're not. There's a slight difference, like this one here. It looks like we've already talked about this one before, Global X MSCI, and it's got a different one. It's a different Global MSCI because this is a consumer discretionary ETF. The other one was a Chinese financial ETF. They have different tickers, but the name looks about the same. Now that's going to make it a huge difference in the profits of them because the last one that I told you about was 30.9%, and this one is 36.65%, which means that if you grab the wrong one, you'd be getting unexpected interest rates when you decide to go and sell. Now, this next one is Invesco. Now, you've heard me talk to you about Invesco quite a few times, but this one is the Golden Dragon China ETF, which is a different ticker, PGJ, 29.17%. This is a lot of, and this one is going to be a US listed China ADR. So that was actually pretty good. Now, United States got some more because I know I put some up here from the US, but those were mostly in the defense sector. So here goes some more from the US at 26%. You got ARK in Innovation, ARK Innovation. I'm okay with innovation. I mean, as long as it's paying me money, because I mean, when we was looking at them cyber trucks, we were like, oh yeah, we're going to make a whole bunch of money off of those trucks. And then all of a sudden, nah, that didn't happen. He's talking about those robocabs. I'm hoping to get my hands on a robocab, but got to see how many people crash in the first year when the car comes out in 2026. I might be the first person to buy it in 27. I ain't going to be the first person to buy it in 26. Now, this US ETF is Adaptive Select, and it has ADPV, which sounds like that new social media platform that was supposed to be going up against the downward turn of TikTok. And this one has a mid-blend cap, which still gives you 35.26%. Davis Select US Equity ETF does USA. So DUSA is the way they're putting this one out at 26.77%. And it has large values in a lot of places. So that's going to be fantastic for the rest of us here. And we'll be able to find ourselves picking up a decent quantity of revenue off of that one. There's another one that's an even larger blend of ESGs. This one is TCW Transform System ETF. Their ticker is PWRD. Ticker is PWRD. Now, for those of you that watch the show outside of the show time, these are popping up in the comment section in real time. Therefore, if you do the replay on YouTube, you will see these popping up in the comment section in real time. So you can always go back and catch any of the ones that you've missed. TCW. Oh, I almost thought they had ECW, but TCW, Transform Systems, ETF. This one is PWRD with a 35.6% interest rate on large blends. Special shout out. He wants some of the guys, but Usman got some like off the wall. He's cracking up laughing when Usman comes in. So special shout out to KJ Kelly. Okay. Nope. I got KJ Keys. Hold on, it's KELI. Is that it? KIEL. KIELY. Oh yeah, okay, I put it right this time. There you go. Second one in a row. I got you up there. He was here for before. He's asking me, can you tell me how to get the fucking time? Checked all the maps and can't find it anyway. No, I actually do not remember how to get to, because you got to remember, bro, I have been asking for years how to get to Sesame Street. And then when I seen Big Bird get arrested the other day, I was trying to figure out like, well, how is he going to get back to Sesame Street? You know, Bert and Ernie having a domestic dispute, and Elmo was locked up next to Diddy, and now Big Bird then got and Snuffleupagus ain't got no food to eat, and you know, yeah, Oscar got took out. Trash man finally came and snatched Oscar. Now you asking me, how do you get the Funky Town? I don't know, bro. I don't know. Moving on, you got America Century US Quality Growth ETF. This one's got a QGRO. That's nifty. It says grow in the ticker. 34.97% interest on this one. And this one has a large growth. Now, these actually, these are not dividend paying stocks, but the percentages are definitely higher than the 22% on Orchid Island that we were talking about. So something to look into is to look at the value of the shares and then look at the percentage yields that you're receiving, because you have to buy it and then let it increase by 34.97% and then sell it so that you can get that 34.97% interest. Since these are not dividend paying stocks, these ETFs are among the top performers in the United States for 2025, with a focus on innovation, quality growth, and thematic investing. It ain't over, y'all, because now we're going to England. Special shout out to England. They have a Vanguard S&P 500 UCITS ETF. It's called VUSA. Nifty. You could tell who supports the Americans. This one's got as much as 33.9% interest on it, but it does show some lows as low as like 4% interest on it. So you got to be careful with that one. However, it is an S&P 500 exposure, and that's going to be something that'll help you with getting you a decent quantity of capital on there. Now, you do have another one that is an iShare physical gold ETF called SGLN. This one's bringing you 29.2% to 35.2%, and it's on physical gold. Now, I talked to you guys a couple of weeks ago about buying that gold. Now you can buy yourself some ETFs related to gold. which can get you some cash stocks without having to go through the cost and the trouble of holding physical gold. Because as soon as they find out you got gold, they're going to knock you off. And the average individual that get them a little chunk of change like to smash their cash against their face and pretend like they're rich because they got all this money they can't hold in their pocket. You put 3 or 4 gold bricks against your head on social media and you find yourself missing 2 or 3 gold bricks by morning. These folks don't play no games around here. These YNs, these YCs, these boys out here getting ridiculous. But you have another Invesco EQQQ that's a NASDAQ 100 ETF, and it has a 3.5% interest rate on that one. So you definitely want to take a look at that one, and you want to definitely try to compare profit ranges, because this one is as low as 3.5%. Now, further on, still in England, we got some iShare Core MSCI World ETFs. That's called SWDA. That's between 4.7 and 2.8% on global equities. And you would never know how many of these things are out there worth looking into, because I'm finding all of the most profitable ones that we could get ourselves into and then try to invest in those. Now, Vanguard is another one. Look, we should be trying to find a way to invest in BlackRock, because BlackRock got that capital. I want to be a majority shareholder of BlackRock, because BlackRock is a majority shareholder of a lot of stuff. Vanguard FTSE is an all-world ETF, VWRL and a VWRP, between 5.2% and 25.9% of global equities. That's one that you'll definitely want to ride with for a little bit. And I'm taking care of you guys over on TikTok side as well. Well, not TikTok side. I'm sorry. Twitter X's side. I got you guys. I'm dropping this information into your comment section as well. So Twitch, YouTube, and Twitter are all getting the same information. So now y'all can't say that y'all didn't know. Somebody didn't tell y'all, because I came and I told y'all. Now, UK's investors favor global and US equity ETFs as well as gold for diversifications and inflation hedging. Canada is the next one up. I told y'all we going all over the place. We got some iShares from S&P and TSX Global Gold Index ETFs, which is called XGD, 33.6%. And I got to tell you, this is a long list. I was sitting over here thinking, oh, yeah, I got y'all. I'm going to throw this down. This ain't going to be no big deal. But then when I started setting, I'm going to send you the ticker. I done put more work on myself than I should have. Global X Gold Producer Equity Covered Call ETF GLCC. Oh my God, these names are long. Like Bonquisha Shaquera Nasa. Like Noxema Gonorrhophacus. So some ghetto names. But this one has a 33.66% interest in quarter one, which just ended in March. And it's a gold producer. It covers all calls. And a cover call is selling offering to sell a stock option that you own possession of. An uncovered call is offering to sell a stock option that you don't have. So since they're covering all options, that means that when they put up a option for sale for gold, they're offering you some gold. And if you buy it, it's yours. It's not just going to be the fictitious offer on the plate. Now, FTSE all cap ETF has a ticker of VNC. Doesn't show any interest rates right now in Canada, but it's an all cap equity. You got another investment location in Canada that is a BMO MSCI China Selection Equity Index ETF. This one is a ZCH ticker, which 21.39% in quarter one of Chinese equities specifically. Now, this next one's going to be pretty good because it's an iShare Core MSCI. And this one is a world ETF, XEF, for international equities. International equities. Boy, I gotta tell you, that's a lot of stuff to get on. Now, the gold and resource ETFs are leading in Canada with VNC or VCN and XEF providing broad domestic and international exposure. And I did not think that there were so many of them here. I know y'all flipping through. Y'all like, dang, he got a long list again today. Yes, I do. Now, Ukraine. There are no Ukraine domiciled ETFs, but several global and emerging markets bound ETFs have small allocations to Ukraine. So these are some of the ones that we're going to give you. So while these are not specifically for Ukraine, you can get them as they show support to Ukraine. A little bit different. They have a First Trust TCW Emerging Markets Debt ETF, which is EFIX 2.18% EM bonds, which isn't really all that high. But considering what they're going through, I wouldn't expect it to be high. The market is going to be based off of the volatility and stability of the country. So if the country is in a volatile state, so will its stocks. So Janus Henderson EM debt hard currency ETF. Who calls their company hard debt? Like you're going to give us money and it's going to take you forever. Kneecaps, ankles, firstborn. Like being in a relationship with Chris Brown is going to be dislocated, rotated cuffs, fractured pelvic bones. But Janus Henderson EM debt hard currency has a 1.52% interest rating. And then Virtual Stone Harbor EM high yield bond ETF got a VEMY, VEMY ticker at 1.4%. And these are EDM yield dividends. And I know that when we're thinking about these, in comparison to the ones that we covered before that were like 22%. And you were like, man, these are at 1 or 2%. You got to look at the 1 or 2%, see how much is up there, because if it's $1,000 stock and the 1 or 2% is going to give you a couple $100, it's still going to give you some money. It just got to depend on whether or not it's enough, if you can afford it, stuff like that. Now, investors are seeking Ukraine exposure typically use global EM bond ETFs. And Belize does not have its own ETFs either. Investors in Belize access global ETFs through international brokers such as Alpaca Trading, Interactive Broker, and MEXEM, which offer thousands of ETFs from the United States, Europe, and other markets. So some of the ones that they support in Belize is going to be the ones from China with the tickers of FXI, MCHI, KTech, CQQ, and GXC. Those are the ones that I told you guys about earlier. The ones from Hong Kong that they support in Belize is going to be KTech, CHIQ, CHIX, and PGJ. The ones they support from the United States are ARRKK, that's 2 Ks, waiting on a third, and then ADPV and DUSA, that sounds like DUSA, powder, PWRD, and then QGRO, QGRO. Those are the ones that they're supporting from the United States. The ones that Belize is supporting from England is VUSA, SGLN, EQQQ, SWDA, and VWRL/VWRP. Two more, and then we're going to slide on to the next country. Canada, they're supporting, Belize is supporting Canada with XGD, GLCC, VCN, and VCH, as well as AXEF. Finally, Ukraine also supports this one. There's EFIX, JEMB, VEMY, EMBD, as VEMI sounds like VEMI. And then you have Belize, which accesses via global brokers like IBKR, Alpaca, or Maxim. Well, there are no local ETFs, and they only use global funds. Now, Romania's ETFs market has expanded significantly, offering both local and international investors efficient access to the country's top companies and regional supports. So over in Romania, special shout out to my boy in Romania, Red Void. We've got this company right here that I believe you guys would be okay with. You have, come on, new, there it is. Romania BET. It is not like the BET Awards, but it does give you a decent stock option. Looks like it's been large for 20, but it is not showing us the percentage rate on this particular ETF in Romania. You have Travel Valley BET. You have Globe Invest BET. You have Intercapital BET. You got a lot of these BET trons. So many of these that you can pick up the ones that you're looking for, potentially invest in them to turn yourself over a pretty decent profit. What else you got here? You've got Intercapital, SBI, TOP, TR Cuts. And then you have iShare Music, Frontier, and EMEFT. Bruh, these are a lot of stocks, and y'all can't say that y'all not seen them because I'm throwing them into your comment section. Y'all can see them. I can see them in my comment section, so I know you can see it in yours. These are a lot of stocks that you guys could be investing in. And these are the ones that I specifically decided to go and look for you guys while the market is suffering from the tariffs. Sectors and ETFs facing headwinds require export-driven and emerging market ETFs, to especially those with heavy China exposure, go under pressure as retaliatory tariff bites. Well, then, U.S. industrials with global supply chain, consumer directory, and technology ETFs may see higher costs and disrupted operations, where strategic moves for investors include defending the positioning by increasing allocations to consumer staples, utilities, and higher quality U.S. companies to buffer against volatility. They're going to be favoring small cap and domestically oriented ETFs that are less reliant on global supply chains, and then consider gold and the Japanese yen as hedges against the market turmoil. Now, some of the opportunistic tech players will be watching for rebounds in tech ETFs during the pause, but be mindful of outgoing volatility. Bottom line is that tariffs are reshaping the investment landscape in the United States, creating both risks and opportunities. By focusing on ETFs that are insulated from global trade stocks, you could tell I'm burnt out, or positioned to be beneficial from protectionist policies, investors can navigate the uncertainty and potentially profit from the new market dynamics, especially since we're looking at a reasonable 80% or 90% guarantee that TikTok is going to sell and the US is going to buy, and then the tariffs is going to go down within 2 to 3 weeks of that. It could also be delayed, but there's like a less than 5% chance that Beijing's still going to say no with all of these tariffs happening. In having the information that I provided to you guys, you said, well, what are the risks? Well, let's see. You can navigate the uncertainties and potentially profit from the new market dynamics. And you're asking me what specifically are you risking? Well, every dollar you put up is going to technically be considered a risk, but what is the risk of losing all of your money on the investment deal? Well, the statistical average that TikTok doesn't sell by Beijing and the president mandatorily does something else or continues to tariffs, like I said before, it's approximately 1%, which means that we're looking at about an 80% chance that we're going to have the tariffs removed by June 20th, if not sooner, which means that all the stocks that are plummeting right now with uncertainty are up for the taking. It's just like having brand new Jordans go on sale with a timer ticking backwards on it. It's just like coming to find out that a Rolex is free for the next 48 hours. It's just like finding out that you can have whatever car you want off the dealership before noon. The quicker you get in there and take as much as you can, the better it is for you, because after time stops, when TikTok gets sold, that's when you're going to see the market go the opposite direction, because outside of the standardized base rate tariffs that is being imposed universally, the inflated tariffs that have been imposed on China, Canada, and Mexico are based on the country's leaders not cooperating with the demands of Donald Trump. Once demands are accompanied by the other countries, the tariffs will be lifted. For example, Canada has the tariffs on them because of their failure to produce border control from their side. Mexico's got the same issue. They were both instructed by the president of the United States to put up stuff on the border to prevent from having drug trafficking and other stuff happening across state lines, where U.S. has to protect U.S. borders from out of country invasions of drug trafficking. So he said, hey, you protect your side, I'll protect my side. That does put twice as much manpower out there, but why is my troops the only troops out there? So he hit everybody with tariffs. He hit China with tariffs too, to incentivize them to do the $1 million project. So since it's related to tariffs and it's not something that's going to be mandatory, this is a key indicator of a market shift. It's going to stay like that until Donald Trump gets what he wants. The whole time it's going down, you get to continue to buy up. Now, the other risk is Beijing doesn't allow ByteDance to sell to the U.S. and the tariffs stay for another year or 2 years. That's another risk. Ain't going to change nothing as far as your investment opportunity, because very few companies are going to go out of business because a tariff existed for 12 months. You're not investing in the tariff sectors, the sectors that are negatively impacted by the tariffs the most. You're not investing in those areas. You're investing in areas that's not readily impacted. Now, I am going to tell you, I'm going to put my money towards real estate investment trusts, because I mean, they're still going to make money, and the longer they stay undervalued, the higher the profits are going to be, because the stock is right now at $6 a share. If the economy stays the way it is, the stock might go down to $5 a share by May. It might go down to $4 a share by June. And if you're buying as much stock as you can buy between now and June, as soon as the tariffs drop on steel and aluminum and other materials that are utilized to build houses, everything's going to ship for the real estate market, and that is going to be a massive boom in the pockets of anybody that has a real estate investment trust after the tariffs are listed. Now, with every investment, whether it's a low risk or a high risk, the low risk is where you're going to put up money, and if like a meteor strikes the earth, you might lose some money, but under normal circumstances, you're not going to lose any money. Now, the high risk ones are the ones where you're going to put up money, and it's almost an 80% chance that if you don't do this right, you're going to lose everything that you put on the table. Now, recognizing that, you got to understand that if you're going to lose more than what you gain, like playing poker on a slot machine, then your goal is to only invest when you're confident in being allowed to have nothing left. Your risk tolerance is how much money can you give away without it negatively impacting your agenda, without negatively impacting your livelihood. because if the stock market crashes further than anticipated, which I expect it to go down a lot lower, and it's still going to be doing good once the other end of this contract happens, I'm looking at the fact that, if a company goes bankrupt because of longevity, then I can see that money being completely lost. But as far as just like investing into something that's really only going to be like 2 or 3 more months worth of inconvenience, and then everything's going to off shift. Yeah, we're going to have like 2-for-1 delays on recovery phase. So if we're in this tariff scenario for 5 months, we might have 10 or 12 months of recovery phase. So we might still see some declines in margins, but right after that, we're going to see a lot of increases. Any profits that you're making from cash dividend stocks is offset by any investments that took a financial loss. So if you're taking financial losses and getting dividend distributions on it right now, once the stock market rolls over, you'll have plenty of profits coming back, because all those stocks that dipped 700% or more, which is 7 times the value of the original share price, that stuff is going to go back up by that 7%. So while people were shocked and distraught because they lost 7 times more money than they invested this time around because they weren't on time, it doesn't change the fact that once they get back in, they're getting back in at a lower rate. Collateral damage like this, rich people will be negatively impacted more than poor people because they didn't pull out before the situation got bad. Poor people couldn't afford to be in there. So now that we're investing in that as financially challenged individuals, you're able to come in at the bottom and stay for the growth. And that's one of the best parts about it. Now, crossing through. Oh yeah. That's all of the ETFs that I had for y'all for today, because we didn't have a lot of stuff to set up because we kind of covered all of the stuff yesterday. And, I didn't want to drag us into a completely different scenario. And I wanted to make sure that I maintained my word. So as far as like giving us some investment opportunities in ETFs and stuff like that, coming across, I think I covered like 5 or 6 different countries. I didn't cover all of them, but I did cover 5 or 6 different countries. I believe that is a good start, because if you take this list from today, which I think I've named like 5 or 7 lists of ETFs that you can invest in multiple different countries. And if you combine that with the other ETFs that I've been giving you over the past 4 months, I believe that you would be able to have more than enough investment opportunities than you have capital on your plate to be able to put down. So you want to, one thing of advice that I can give you guys is that when it comes down to diversification, you don't want to spread your money paper thin. You want to be able to have a decent quantity of something in each one, but you don't want to have all of your money in one. You want to be able to set a certain amount, whether it's 500, 1,000, whatever, 10,000, 100,000, and then move some money in other places so that there's a percentage of your money in each one of the options that you invest in, not 80%, 90%, but like 5, 10, 20%, something like that across 5, or maybe 3, 4%, 8% across like 10, or stuff to that effect, so that you have multiple different things that's going to be generating your revenue in multiple different ways, which gives you the ability to buy and sell and be able to turn you some extra profits, which basically turns the rest of us into day traders. But with all of the fintech that's out there, we should be able to be very good day traders without the assistance of somebody who's been paid to do this for the last 2 or 3 years. Rev said, you be on point. You say what I be thinking. Well, sir, we came from the same generation. We got the same upbringing. We came from different parent background, but we got the same upbringing. I'm the last of a dying breed. The best generations that happened between the baby boomers and the Gen Xers. I'm right in there. The last step. After me is the Y2Jers and the millennials, and so I know how it is. And one of the things that I do is I try to make sure that I give you guys enough information for y'all to go and do y'all digging, do y'all own research, and make sure that y'all can double back. And if y'all got questions, I can go do some research, because I be digging. I be going through this, like I put some of the search engines that I use up on the show one week so that y'all could see, like, I really be digging for information. Usman was like, damn, I didn't even know. Yeah, I be digging. Today is a smaller show because since I only grabbed you guys some of the stuff that's positive in today's economy, the problem is that it's not a laundry list of stuff that you can get into because a lot of stuff is taking a dip. But these are the ones that are not negatively impacted by the tariffs. And that's why today's show is so short. But the real estate investment trust I was telling you about for American investors, yeah, those are good to get into. Those are really good to get into because they're going to give you a little bit of cash once a month, especially if you get the monthly ones. They're going to give you a little bit of cash every 3 months if you get the quarterly ones, but they're going to give you cash back. So you put your money up, and then when they give you cash back, you take the cash they give you and you put that back up. You can have a trend. And I was sitting over here thinking a good strategy for working real estate investment trusts is to find the one with the lowest investment capital cost with the highest that you can find payout, which, oh yeah, I'll put them in the comment section so that you could get them all. I wanted to make sure you got them. And if you go back to the frequent, because all this past week except Sunday, we was putting up stock options. We was giving y'all jail cells. We was giving y'all police officers, military stuff. We were giving you everything. Cybersecurity, everything. Like we were giving women stock options that they could invest in on Saturday. So it is not many places that you could get. I did what was it? Most of the last week we was giving you different places that you could go to get you a job. Being lazy, we got you a job where all you had to do was talk. We got you a job where all you had to do was just stand there. If I didn't find you a job where all you could do is look pretty, because that's mostly women jobs, but models, stuff to that effect, and all of the stuff that I found, which further emphasizes that like OnlyFans should not be a career choice. But all of the stuff that I found, you could be making up to 100,000, 160,000 a year doing that job, getting no less than like $30 an hour to do the job, and you don't have to degrade or devalue yourself to get paid. You just got to show up. Jobs that you get paid to show up. You don't even got to do nothing. You just show up. And so between that and all of the different ways that you can make money, I'm like, yeah, we can do that. So like what I was telling you guys with getting the ETFs, if you get those real estate investment trusts that pay monthly, like Orchid Island, it's the lowest one right now at like $6. It's paying off 12 cents a share for $6. So for $600, you'll get what? Do the math for me. 12 times 600. That's what 12, 6, $720. Or $72. Sorry about that. $72. So that would be $72 payout for $600 worth of shares at $6 a share. So $72 payout. Now, but that'd be a $72 payout every month. But if you put that $600 down on 100 shares and you're getting like $72 back off of those $600 worth of shares every month, you could take that $72 and put it on a different investment opportunity. So while Orchid Island might be paying out the largest quantity of dividends every month, you could take your principal every month, put it into Orchid Island, take the dividends returned to you from Orchid Island and put it on a different REIT, and then let that REIT give you dividends, and take that REIT's dividends and put it on a different REIT, and just keep doing that every month until all of your real estate investment trusts are exceeding 1,000. You can set goals, have all of them pass $500, have all of them pass $1,000, have all of them pass $10,000, and just keep doing that until you're getting a large enough quantity of cash flow where if you wanted to go and buy stocks that do not distribute dividends, you can still leverage the full quantity of stocks that you have as leverage towards a cash loan. And then if you have enough cash stocks that's paying you dividends, now when you borrow that $100,000, if you're getting $50,000 a year from cash flow, even if 75% of your stocks is non-dividend distributing, if 25% of your stocks is giving you the $50,000 a year or $20,000 a year that you need to pay off that cash loan, you can still do that. You can still take out the cash loan. You can still buy stuff. You can pay the cash loan off with the dividends. And if you're making more money than what you need to live off of, you're really paying for your standard of living with your stock option, and then taking the change from the stock option and paying on the cash loan. But the cash loan bought something cash up front, like a car, a house, a business, brick and mortar company. And then it's the cost of doing business, so all of this stuff pieces together in a bunch of different ways. When I was telling you guys about traveling around the world as a cost of doing business, the only way that you can travel around the world as a cost of doing business is if you have the money to go. It's a tax deduction if you spend the money, but you got to have the money to spend. You can't just fly around the world on an LLC just because it's an LLC. You can fly around the world on a C corporation if that C corporation is paying for your airplane. but if your rent money is paying for your airplane, the C corporation ain't going to do nothing for you. You still got to pay your rent. Now, Rev said, I'm working on something. I'll email you soon. It's working. Definitely let me know what you got going on, because I be piecing together some strategies. And I was sitting over here thinking, okay, you gotta look at, depending on what platform you're working with, you have to see what the buy-in dates are, what the sell dates are. You have to determine if they will allow you to sell after the X dividend date and still receive the dividend distribution on a dividend payout date, because the X dividend date and the payout date are not the same date. If they allow you to sell after the X dividend date and they still pay you out on the payout date, then you can buy one today, sell it after the X dividend date, buy into something else, and be there for their X dividend date, where you could get paid twice off of the same stock capital. Or in the event that you can't do that, where you have to sit and wait, you got to put your money up in a stock that pays out for its dividends before the X dividend date of another investment, which means that you have to take the dividends and the principal, sell it when it's high, so that you can go and buy something else. But right now, everything is low. So if you buy into something, I'd be god dang if you'd sell it, you'd hold on to it until April of next year and then sell it. And that's why I'm telling you, go and get the cash ones, because the cash ones you're going to buy and hold. You can buy some and sell them, but I recommend that you buy a whole. Now, if you buy one and it's just so happen to go up, then yeah, you could sell it while it's up. If you catch it while it's up, because I think they update the numbers. They're supposed to update the numbers daily, but depending on what platform that you're utilizing, you might not see a real change in your stock option until next week, like once a week kind of stuff. And when that change happens, especially if it's a delayed recognition of change, if you can act on it, you act on it right away. But if you look at it, it's like, man, I missed the stop. Like when you ride in the bus and you miss your stop, instead of just getting off, you just gonna ride to the terminal and ride back and get off when the bus get back to your stop. That's what you got to do. If you invested into the stock and the stock started plummeting before you had a chance to pull out your stock, you just got to ride that wave until the stock market go back up. Because if you sell it before it exceeds what you paid for it, you took a loss. So if you hold on to it until it turns into a profit, you still are able to make some kind of gain off of it. You just don't have nothing to show for it right now while it's down. But if it's down at the end of the year during tax time, that's a benefit for you anyway, because that's less for you to pay taxes on. So I definitely want to hear what you got going on. As soon as you piece together your platform, definitely let me know, because I would like to hear other strategies and other opportunities that you guys have for picking up stocks and real estate and ETFs and gold and minerals and other assets. Because, I mean, hey, if we can find more ways to make money for us, then we won't have to work as hard. I was actually moving money around this week, and I was like, man, let me put something down on this. I was supposed to put down a lot, and then I put down a little because I wanted to make sure that I had some stuff, because we had talked about I got to go back and talk to them again, but apparently I'm going to have to order a shipment through the link. And I encourage everybody to get a bottle of that, at least one bottle of that. That's like a $30 bottle of wine. You can pick up something not like, you can't pick that one up at Walmart, but you could pick up a bottle of wine at Walmart for like $20, $30 a bottle for that size bottle, but it's not going to be that cooked wine. that I told you about. So I want to compare this to some of the stuff that we've been drinking on the show, because I didn't come here a couple times with some of that black box wine when we were doing Boxel's box wine holder, the box wine dispenser. And I want to see, like, is this wine that much better than some of the other wines that I've been drinking? But I know that it's good. It's good because it's real wine and it's cookable wine, and that's something that I really want to do. I want to cook with it because I love cooking. And we were supposed to be doing the chef homeboy cooking with Xander. I ain't twerking, y'all. Y'all not gonna have me twerking. I'm gonna have to get Kaya to do that. She gonna have to collaborate on the show and do her little dance, and then I put up the food. I ain't twerking nothing. But fact is that we eating healthy and everything like that. I showed you guys the Fit Chef food plans, and we're gonna be showing those on the show real soon too. So I said, well, let me put some money aside to tackle some of these things, and that way I can bring it onto the show. And since that's what I was gonna be doing, because I think I could benefit from it, because from what I understand, the meal plan is supposed to be giving you actual meal plans and recipes for the membership. So you sending me food and you're going to send me recipes to cook. That's fantastic. That's better than the other one that was only going to give me a bunch of recipes where I got to go to the show and I got to go to the store and I got to go cook some stuff. He's telling me chill. No, for real. Because I'm not trying to, I ain't trying to twerk nothing. I ain't trying to twerk nothing. She can twerk it, and I can sit there and I can sip on the wine, and she can do the little dance. And I'm gonna pour the alcohol on the food. Every every meal episode you see me with, you're gonna be like, a bottle of wine, glue, 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 glue. Like you see them Italian restaurants where they be pouring the whole bottle into the big old kettle kind of thing. It's like you trying to get the kids drunk. Shoot, third generation career alcoholic. Well, we trying to clock in. So we're going to go ahead and put some stuff towards that to try to get that in here so that we can start doing those promos, because we want to make sure that you guys can see them. We get the food in, everything like that. So I'll be able to y'all probably see me over here on the show, tipping the bottle, getting a little tipsy and everything like that. But it's about investments. It's about investments. Like Donald Trump, there are things that you can invest in this world where you think that something's going to come out of it really good, and then it turns out to not be as good as you hoped. I always tell people to not oversell yourself on success. You want to put in all of your own personal efforts for your success, but don't oversell yourself. It's called wishful thinking. Don't oversell yourself on the ideology of success, because until you have seen the actual results, your fictitious observations of the method of results is not the same. So you'll always be disappointed, because in a perfect world where all the chips are in your favor, where all the cards, you hold a handful of spades, when you've got the winning set, the best that you could do is what you're imagining. The worst that it can get is unimaginable. And the truth of the matter is that when it comes down to the consequences of one's actions, we typically try to rationalize the best that we can accept in this situation, hoping that we never come across the worst. But I was always raised with a different mindset. We was told to expect the worst, hope for the best, and take whatever happens in between. So if you know the worst case scenario of this situation, where you get nothing out of this, but the best case scenario is that you get a lot out of this. Whatever you get in between something, you appreciate that. You're never upset and disappointed because you didn't get enough. Jesus was never upset because he didn't get. He either got it or he didn't. If he got it, he shared it. So even if he got it, he didn't even get all of it. He had some of it. So you got to understand that it's about setting yourself up, but not overzealously. And that's why I'm telling you guys about diversifying your portfolio. You don't want to put a whole bunch of stuff into one spot. You want to put some here, some here, some here. You want to spread everything out. And as long as you have it spread out, if something goes down, but something else goes up, there's a possibility that the down stock might be less than the up stock, and the overall value of your portfolio might be up still. If your stock option, your portfolio, ETFs and all, is overall up 80-90% of the time, the 20% that's down doesn't matter. It's the cost of doing business. As long as the most expensive stocks that you have are up and the least expensive stocks are down, or there's a large majority of small stocks that's up in comparison to the smaller majority of large stocks that are down, where overall more than 80% of your platform dollar-wise is up, you're still doing good. You're still doing good. And it's a learning curve. If you're at that 50-50 mark where some are high and some are low, and out of the 10 or 20 that you got, half of them ain't doing that good, but you're still getting your decent quantity of cash out of it, you can make changes along the way. But I'm going to tell you right now, don't sell nothing that you done bought until July. Wait until like July or August. Wait for that increase to happen. Wait for TikTok to get sold, and then watch the market change. All the stuff we're talking about right now is stuff that we're going to buy during the downturn. So even after you buy it, it might still go down some more. Doesn't matter about that. Don't worry about that. That's short term. You're focusing on long term. This time, April next year, that same stock probably going to be worth double. So you're buying it now during a downturn. And you want to get as many of them as you can until the Trump buys TikTok, and then hang on, because it is going to be a wild ride for the upswing. Because as I just told you today, even in China and Hong Kong, it's a massive fluctuation. It is like head bobbing. And you got Becky going on with the stock market. And if you're trying to catch every high point, you will risk massive loss. It's not a get rich quick situation. It is a long game. It is a marathon. It is not a sprint at all. This is a situation where you're looking at 5, 10, 20-year plan. You're looking at being successful over time. This isn't an overnight scenario. But once you get there, you will be satisfied. And I'm going to be proud of you, because I'm going to be there with you. So with that being said, I want you guys to stay tuned for the videos that we got coming up tomorrow, because we're going to be trying to cover Ukraine. We're going to see how well YouTube feels about us talking about investing in countries that are forbidden to be talked about, because since we're not talking about political disarray, we're only talking about buying, selling, and investing in these countries. Hopefully they'll get off my back, but right now they're flagging Ethiopia. So I don't know. I might have to change the texting or something like that. I'll figure it out. But we're going to be talking about Ukraine tomorrow. That way we could, because I promised her that I would do it. So I'm gonna go ahead and get it done. And then we're going to keep moving through the rest of the countries around the world, providing you guys with insight and information on places to go and things to do. So the stuff that we're going to be talking about investing in tomorrow is not going to be the stuff that we talked about investing in today related to Ukraine. So other markets that are investable, and areas that are easily residential for you guys to go and live in. That's what we're going to be talking about on tomorrow's show. And then we've got our Thursday through Sunday shows, where we're going to be talking about self-improvement, alternative mindsets, first person accountabilities, social interactions, and other such. Make sure that you stay tuned for those as well. And we're going to break down more of these strategies and reveal a lot of the top ETF picks for thriving markets in today's tariff-filled economy. I want you guys throughout the show and the rest of the week, as a matter of fact, make sure that you share your thoughts in the comment sections and let me know how you guys are adjusting your portfolios in response to the latest trade war developments, because this is almost like a trading card game. We're just using money, and it's always a good idea for us to discuss, and nobody's plan or idea is ever wrong. Whatever is in your mind, in the best interest of your objectives and your agendas, that is what you stick with, and that is what you do. But remember, just like with collectible trading cards, if somebody else has a card that they use to make themselves successful and you can pick that card up, go get that card. It does not mean that you have to abandon your deck. All that means is that you could take their card and add it to your deck and make your deck that much better. And taking somebody else's diversification platform strategy and add it to yours. You don't have to change your whole strategy. You just have to add some of the stuff they doing to your strategy to make your strategy better. So being able to talk about all the different ways that we can go about investing and all of the stuff that we can invest in gives you the ability to think about alternatives, because there's always another way. There's no one way. And the one way that I provide to you, or the 8 ways that I provide to you on the show, isn't the only 8 ways. There are more ways to do it. That's why we're giving you a different way 3 days a week. The fact that I can give you a different way 3 days a week go to show you that there's always another way. We just got to keep looking for all of the billions of ways that we can be successful. And I don't know about you guys, but I'm going to make it my mission in 2025 to set myself up for greatness, so that come 2026, I will be able to sit here with y'all in different countries talking about how investing is the way to be. Now, since I don't have any more information for y'all and we ain't had no more pop-ups, I really appreciate you guys coming to the show tonight. I want to say, ladies, as long as the situation doesn't make sense, I'm going to keep asking y'all to make it make sense. So ladies, please make it make sense. We're right around 69% followership. So I appreciate the fellas for holding strong, because this is a male podcast for the male's perspective that the women can learn something from and benefit and grow with, because money ain't got no gender or race. You guys, anybody who knows how to save $2 out of 10 and put that up into a stock market, because I just told you that they got some ETFs out there right now that's $6 a share. 2 bags of Doritos is a stock. I mean, y'all can just stop buying snacks and start buying stocks. There's so many things that you could change in your life if you stop buying things that don't matter and start buying stuff that do. And this is little stuff. Case of beer, 3 stocks. Even a cheap pack. 24 pack of Bush worth 3 stocks. No, 4 stocks, because the Anheuser-Busch is like $18 to $24 for a 24 pack, and that's 24 pack of cans. And like I just told you, there's a stock that's like $6 a share. That's like 4 shares at $24. So plus taxes, that's 5 shares of a stock that's paying you every month. So you just really think about how you could change what you're doing right now, because at $6 $7 a share, shit. McDonald's number 1 combo is worth 2 shares. This is how I'm going to be treating like everything when somebody come to me and say, oh, hey, can you go buy me X, Y, Z? Popeye's chicken. That's $40 for Popeye's chicken. Bro, I could buy like 6.5, 7 shares of stock with the price of Popeye's chicken plus taxes. For a box of what is it? 16 pieces of chicken. I can buy I can buy 7 shares for 16 pieces of chicken. I'm just trying to get y'all to understand, like, this is the mentality that I have reached, that we can do this without having to starve ourselves. We don't have to do without. We don't have to borrow against a stone to make it happen. But we could, if you find it, stock options like those SBA loans I told y'all about, that's less than 12%, and you putting all that money on a stock option that's going to be giving you back 22%. It's like, that's 22 off of 12. That's what, 10% interest. That's profit. So you could take the dividends from the stock, pay off the SBA loan, keep the difference and the principal. By the time it's all said and done, your credit score go up. You still got the $50,000 in the bank, and you're still making the money that they gave you. And you ain't had to give them nothing. You just had to get from them and give it to the other person. So that's the true definition of robbing Peter to pay Paul. You got it from the stock and you gave it to Paul to pay off the SBA loan, and you good to go. This is the stuff. But SBA loans require you to have a good credit score, 650, 700, 850. So you got to do some stuff. You got to get yourself together. So one step at a time. That's one of the things I did say I was going to do, and I got to try to cover that over the next couple of months. But I've been doing so many other things behind the scenes. But I want to go ahead and get with the 3 major credit agencies and get y'all those step-by-step guides on how to yeah, well, you talking about okay, so I was talking about the 16 piece just the chicken, but yeah, the 12 piece with the 2 sides is $30, and $30 is $6 a share is 5 stocks. But you say $30 with the 2 small sides and the 2 drinks, and the drinks is going to be like $5 a piece, you still at $40 for the 2 large cup of drinks. So you get 2 sides, 2 large drinks, and a 12 piece bucket of chicken for about $38 plus taxes, be about $42.99. That is still 7 shares. That is still 7 shares. So what you want? 12 pieces of chicken, 2 sides, or 7 shares? I'm sitting over here like, shoot, I could eat me a can of Progresso soup and get me 12 shares. Fuck all this shit. Can of Progresso soup and a bag of crackers and get me 12 shares. I've been crunching numbers since I was a child, bro. I love math. So when I started playing around with these stocks and I started doing all this stuff, I was like, whoo, I could take this and I could do this with real world application. I'll be over there at the gas station when they be sitting over there trying to look, I'll take the 7 shares too. I'll be over there at the gas station trying to get my oil change. They be talking about some, oh, this oil change gonna cost such and such. I'd be like, dang, that's like 18 shares. Like, what you doing? That's like 18 shares, bro. You're gonna have to come down on the price. Take 3 shares off the price of that, bro. Wait, what you mean? I'm like, bro, like you be investing. What you doing? What he said, invest. Generational wealth. Growth. That's what we're working on, bro. Ain't nobody gonna ask me to take them nowhere no more, because I'm be sitting over here like, damn, that's like 8 shares right there. Remember back in the day when grandma used to tell us to keep the noise down because we make the light bill go sky high. Now we in a situation where I'm like, damn, you asking me to do what? That cost me like 9 shares. Like, what you doing? Like when cell phones first came out, we were complaining, you calling me at the wrong time, running up all my unlimited night and weekend minutes. Now I'm over here talking about something. You got me buying shit at the wrong time, messing up my investments in these shares. You're going to have to wait until August. Let me finish buying what I'm going to buy, and then we'll talk about it. But yeah, that's where we are right now, fellas. That's where we are. So I really appreciate all of y'all that came to the show. I hope y'all wrote down all the stuff that y'all can write down. And if y'all didn't, make sure that y'all come back and rewatch the show, because it's in there in real time. So the comment section, as soon as we reach that mark, you can fast forward the show. You ain't got to play it in real time. You can fast forward it to when I started going down the list. And as I was talking about them, it'll be popping up on the screen. At least for the YouTube section. For those of you that is on Twitch and Twitter, it might not pop up on the screen, but on the YouTube side of things, it will pop up on the screen. So if you're not watching us from YouTube, you can come over to the YouTube side, like and subscribe, and get some more information about all the stuff that we talk about on the show. You guys can also join a membership if y'all got time to, and then y'all can get more inside information, because when I start doing these bulletins and start putting it up there, I'm more than positive. I have yet to do it, but I kind of want to do a backup site. There he is. I've been waiting on him on our way out the door. He's still here. He here. That's a shout out to Bayside. Bayside's in here. He said, good evening, fellas. I'll take 10 shares and a side of ETFs. Bayside. He came in at the last minute. I know you were sitting there listening. I know you had to put it on the side. Late start, my bad. Hey, it's all right. It's all right. I had a I had a late start too, but I had a short story, because we had went over all of the ETFs that you can get into right now in the current economy with all of these tariffs, and it turns out there's not a lot. I think I covered like 24 of them, maybe, more or less. I put the whole list in the comment section. What we got in the comment section? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23, 24, 25, 26, 27, 28, and then 29, 30, 31, 32, 33, 34, 35, 37. Oh, damn. 37, 38, 39, 40, 41, 42. Okay, I went through a lot more than what I thought. I went through a lot more than I thought. No wonder I was burnt out about this. Because I was sitting over here like, I'm like, man, this is a short list. I ain't talking about a lot. I feel burnt out. Apparently, I went through a lot of information in a short period of time. It is what it is. Is that I looked at the comments and took a snapshot. That's the fastest way to do it, bro. Scroll through the comment section, screenshot them. You probably took like 10 or 15 screenshots to get all them stocks, because I had covered 5 or 7 different countries, because I had the US, Canada, I didn't do Mexico. I did US, Canada, Belize, Romania, and Ukraine, China, and Hong Kong. So I did like 7 of them just for the day, because I was trying to make sure that I didn't do too many of them, because I'm like, man, I got something to do in an hour. Gotta take these dogs out. I want to visit Belize. Man, I want to visit Belize too. I was actually supposed to go to Belize, study abroad back when I was in college, and it didn't work out, so I never got to go. But I wanted to visit Belize too, and that's one of the things that's on my to-do list with this podcast is travel to a few countries, set up some stuff in a few countries, and make my money for me while I'm in them countries. Then at the same time, visit places like Belize, all the areas of Asia, or at least most of them, because depending on how much money I'm making depends on how often I travel. But hopefully by the time I make it back to the United States, I got an extra person, and hopefully the extra person isn't stuffed in a briefcase, because we want to get him in here legally, because USA is not happy about people being shipped in the trunk of the car and stuff. So trying to fly out there first class and fly back coach, because me and an entourage of people is expensive. I ain't trying to go with that many people, but if I go out there, we already talked about we gonna swing out there and live on the podcast, pick up a wife and fly back. And if I'm flying with 2 people, it costs more money to travel to different countries. It's cheaper for one person to touch 50 countries, 90 countries. It's cheaper for one person to do it than it is for 2 people to do it. But I mean, if there's a budget for it, I should be able to do like the WWE and travel to a different country every week and touch 52 countries a year. That's a lot of money. I have a fun question for you. How do you feel about China exposing how cheap it is for them to make high-end designer brands and sell them for ridiculous amounts of money? That Okay. I think China is boss, because they can make that stuff for dirt cheap, and Americans will buy it because of the name. And that's the reason why I believe that TikTok gonna sell, because if TikTok don't sell, they can't sell the expensive name brand stuff in America no more, because it's overpriced in comparison to the value of the cost for it to be made. They making a ton of money. But what am I supposed to do? Be mad at China because Americans are stupid? I mean, if they wasteful and they're gonna throw away a bunch of money on something that's not that significant, when you can, I be telling y'all can buy the stuff off of Temu. Same stuff that y'all paying through the nose off of the name brand site. Y'all can buy some of the same stuff it ain't gonna be name brand, but y'all gonna buy some of the same stuff. Well, I mean, yeah, you could go buy you a Lenovo computer off of Temu for like $200, where you go get it for Best Buy for $500. But I mean, other stuff, you can go buy a lot of other stuff off of Temu for a third of the price that you would buy it from a Walmart, which is crazy because like $1,000 TV at Walmart is like a $300 TV on Temu. Okay. And if you go to Best Buy and get that same TV, it's going to be $5,000 for the same Vizio TVs, the same smart TVs. So I mean, hey, if they charging through the nose and Americans are willing to pay for it, it's only worth what someone else is willing to pay for. So if branding is efficient and Americans are wasteful, send all your products to America and make as much money as you can. Basically, I said I'm only asking because we know what people really spend a lot of money on, name brands, and will go in debt behind it and won't have a house or investments or any of that. You're right. Them guys that's out there doing those gold digger videos with Lambos and Porsches and G-Wagons and all this other stuff. Where usually it's a rental car because they ain't going to buy that car cash up front just to make a girl look just disrespectful. But the fact is that if they did put all their assets into, because that's what broke people do, they're called car rich, where what broke people do is put their whole estate, all their money, all of whatever assets they have, leverage everything to go and buy this expensive ass name brand car so that they can ride around in a fancy car and their apartment look like a rundown shack. And the reason why people do that is because they're taught from childhood on materialistic stuff, praising and worshiping materialistic stuff. It starts with complimenting babies on how good they look when they're wearing name brand clothes, but the child don't look like nothing when the child ain't wearing name brand. Child should be walking around with a shawl on. Y'all know what a shawl on? A shawl is a gigantic handkerchief that's tied into a diaper. The child should still be cute in the dang napkin. You got to put the child in Louis Vuitton so that the child could look adorable. Oh, he fancy because he in Louis Vuitton. He ain't fancy. Your ass is just wasteful. That's what that is. That's not fancy. You know, you could go get you a Boss Baby suit from Walmart for $20. That's fancy. You got your baby with suit and shoes on. That's fancy. But your baby looking like a mini Rick Ross. That's not fancy. That's overly expensive. And the child gonna get caught at the door anyway. No gang attire. So can't even go to daycare. But a lot of Americans do that. They put their money in places that it don't supposed to be. And that's one of the reasons why, you know, China be picking up on a lot of U.S. debt. But that's one of the reasons why U.S. Consumers is $38 billion of the $500 billion worth of money that China has made over the past 2 years. Because at the end of the day, we're willing to spend the money on the products that they're willing to make. And that's a two-party system because we're not willing to make the product for as cheap as they're willing to make the product because we're greedy. Then we're willing to pay an inflated price to get the product after they make the product because we're wasteful. So not only are we taking a large financial loss because we're greedy, we're also taking an even larger financial loss because we're wasteful. So we're not getting as much as we could have gotten had we gotten paid to make it. And we're losing more of what we did get because we're willing to get it from somebody overseas. We would have did better if we exclusively bought our stuff from America. He said, yep, sagging. Exactly. Baby pants sagging off his diaper. And then they're going to think that that's the norm. So then when the child gets grown, now the child is 17, 18 years old, 19, 20 years old with his pants hanging off his diaper. Got all his boxers showing. Everybody got to know what kind of pattern he got on the back of his Jordan boxers. Knowing darn well that don't represent what it represent out in the street. You wear your clothes like that in lockdown, and you're gonna get locked down. Do that in Diddy cell. Be sagging in Diddy cell. Take that. All I'm trying to say is, you know, the ideologies, the false idols that we put up there with the materialistic objects is not necessary. And I'm not sitting over here telling people to put all their money into real estate and all this other stuff so that they can get rich, so that they can keep all this money in their pocket. I'm saying, hey, we need to put this money in a bunch of places so that we ain't got to work hard no more, because two things is going to happen after they fire everybody from the government, and then they fire a lot of the humans and replace them with machines. You're going to have more unemployed people than you're going to have work available, and with less work available, it's going to be hard to find another job. If we getting old, all of us is in our 30s and 40s and 50s. We getting old. We ain't got this much energy to be dealing with this bullshit no more. So I'm telling y'all, hey, let's take this money real quick. Let's put this money somewhere where the money can make money for us. So by the time we 50, 60 years old, we can quit. We can say, fuck work. I'll just stay at home and play my Xbox. I'll play my GTA 6 at 60 years old, because it might not come out next year. It might not come out for 2 more years. But when it do come out, I'll be able to get the membership online and sit at the house and play my game, because I ain't got to go to work no more. So, you know, we setting up this type of financial investment opportunities is to set us up for a future of retirement, of a work-free retirement. Because when you retire from a job and you go get a job somewhere else, that's not retiring, bro. That's quitting or getting fired. Some people try to meet it halfway and say downsize. But the fact of the matter is that you don't work for the place that you worked for the last 20 years. And now you got to go work somewhere else to make ends meet, because the money you was getting from the last job ain't coming in no more. And you ain't got no more money coming in. Y'all should not be trying to sit here and put y'all faith in Social Security disability system. You see what he about to do with Social Security. Every time Elon Musk touch something, billions of dollars go back to the U.S. government. You see what they did? They just said, well, we're going to offset the people who got overpaid in a few dozen places. Instead of just letting it go, they got to pay it back. You know how they're going to pay it back? He's going to stop payment distribution until it's paid in full. So however much their monthly payment was supposed to be, it's just not going to be that until it's paid in full. He's not going to take a percentage out of their money where they still can have something, until he's going to take all of it until they pay it all back. And if they gave a lot by accident, you ain't getting nothing for a minute, which means you about to not have a house, a car, nothing like that. And that's what I'm telling you. If y'all invest, when they stop with Social Security disability, you ain't gonna be hurting, because you don't need their money. You only need their money when you don't have no money of your own. Basically, I said people sagging, face tattoos, gold chains, all this bling on their hands, and it's ridiculous. It's clown. It is clown. He said PlayStation gonna be VR glasses. PlayStation gonna be that thing that they put on your temple and your eyes roll into the back of your head. That's what PlayStation gonna be. But at the end of the day, we'll be playing it because we ain't got to go to work. But you're right. Think about the folks. They still doing it. They snatching all the good teeth out their mouth, putting golds and platinum and silver in their mouth. They big smiles with black gums from the corrosion from the metal that they shoved in their mouth, where bone used to be there, and now there ain't no bone there. They got veneers. And they just spent $10,000, $20,000, $30,000 to do their teeth. I was just talking to somebody the other day. They were sitting over there bitching about how their bills needed to be paid. Then before I told them, I said, well, why don't you do this and do this to take care of certain bills, and then go and take care of the other stuff? Oh no, I got to go get my teeth fixed. Oh, I got to go do this. I set this point. Oh, I got this trip I had paid for already. I got to go to the. You ain't got to do none of that. You ain't got to do none of that. You got day-to-day operations where you'll be sleeping under a rock in the dark, or you can go and do a dentist thing. Bro, that dentist thing can wait, because you need a roof over your head. But if you don't give a fuck about that, then that's you. But see me, I'm like, I want to make sure that the roof is still here And then we do the teeth. And then when they be doing the tattoos on their face, they're not going to get a good job because they got tattoos over their face. These females that's covered in so much tattoos, oh my God, that is unattractive to me. But some people like it somewhere. I don't know. They think they look good when they getting it. And I'm like, it's like taking a key and scratching a car before you buy it. And then when somebody else walk up to it, they're going to look at that scratch like I wouldn't have put that scratch on that car and be like, I don't even want the car now. That's how I feel about tattoos when I be seeing tattoos on females. I don't even want it now. Like, she cute, but that tattoo is ugly. I don't care where it's at. I don't care how big it is. The bigger it is, the more I'm turned off about it. That's just like, It's like going to the grocery store and getting you a bag of chips that's already been open. It's like going to the pharmacy and getting your medication and it was already open, missing a couple pills out the bottle kind of thing. Stuff like that. Like, that's all right. I don't want it. That's how I be feeling. And then it get worse because when they put all the jewelry on, you already know that the jewelry depreciates in value the more you wear it, right? Then most of these folks don't even got real jewelry on them. But why your ridiculousness got to be wearing $10, $20, $30,000 worth of jewelry around your neck, on your hands and fingers and whatnot, so that somebody can snatch your whole estate off your person? Part of the idiot side of me want to say, well, why don't you just go make you one of the $1 Million Man Championship belts out of $8 million? So it's full diamonds, real gold, set it up there, and then say, all right, now that it's built, I'm going to sit it on the stage and see if somebody's going to touch it once they find out that it is real gold and real diamonds, and see if they not going to run up there and try to beat my ass or take it from me. That'll be a true Royal Rumble match right there. You'll have people trying to catch me in a parking lot. If I had $8 million on my shoulder like Travis Scott, I would have got knocked off. The Big Show, Triple H, China would have came back out of retirement. I'd have been knocked off. The Undertaker, his leukemia behind would have came and tombstone me. Kane would have came and choke slam me. They would have each been breaking off a piece of the belt. I don't need all of it. I just need this piece right here. It ain't 8 million, it's 500,000. I got the piece right here. Plane tickets ain't cheap now. These superstars are superstars. They ain't rich. They just go places. They popular. There's a difference between being popular and being rich. You can be one or the other. It ain't always a time where you both. So if you popular but you broke, you see somebody with an $8 million championship title on their shoulder, you gonna fuck his ass. But that's how I be thinking about, like, they got them big old Flavor Flav pendants around their neck and big old gigantic what's that new guy? Not Louis Vuitton, it's the other guy, but his watch is supposed to be more valuable than a Rolex, even though Rolex outstands the test of time. But his watch is like, Rolex's is like $55,000, and this guy's watch is like $170,000. And you're supposed to buy this watch, wear it on your hand. Bro, anything more than a Hamilton, that's too much. And a Hamilton is like $1,300. That's too much for a watch, bro. When most of us look at our cell phone to see what time it is, you getting you a timepiece that only other people who know about watches is going to look at that and be like, that watch is expensive. So that you can do what? People say, he must not be broke. Well, if you really want to do something, go get you one of those Solarium cell phones, $10,000 solid gold cell phone. 10 karat, I do believe, 10 karat solid gold cell phone. Go get one of those. That way, when you leave your iPhone on a register and somebody steal it, it just be gone. Casino, baby. As they be playing Russian roulette with this shit, bro. They over here tripping. And that's why I said, well, I let them make their mistakes, because you got to understand the up until this past year and a half that we've been doing, because we started November of 2023. So we in April 2024. So we in our second year of doing what we do. So I want to say I started doing this real heavy in about September with telling people about ways of making money for themselves. We will talk about all kind of topics before that, but now I'm really heavy about talking about making money for ourselves. So since September, come this September, I would have been talking about it for a year. Everybody who know about this show should have been coming for the longest period of time. Everybody who's been coming this past 5 months got a lot of reasons to come. And the people that's going to be coming over the next 6 months got a lot of reasons to come. With before I could say they made bad choices because they did not have proper guidance. I can't say that this year, because anybody who knows somebody who's making them stupid ass decisions could send them a link to this podcast and be like, bro, check this shit out, bro. Check this shit out. This dude right here, he making money on the low. He over here taking dollars and cents and throwing them into the stock market and coming out with cash flow, bro. And anybody who want to make legal tender is gonna be like, damn, I got to get on this. He's showing us how to hide our money legally. He's showing us how to wire our stuff out of the country legally. He's showing us how to stash our assets where our ex-wife can't come and seize it in a divorce legally. What? And if we ain't learning how to do right off of this podcast, they don't deserve to have it. So there's going to be a percentage of us that's going to come out of this tariff crisis and we're going to be wealthy. There's going to be a percentage of us that's going to come out of this tariff crisis and still be broke. I am not going to be the percentage of folks that come out of this tariff crisis and still be broke. I don't care what I got to put in on these investments. I will live off of my investments. I will work and live off of my investments until my investments make more money than I need so that I can quit working, so that when I stop working, I don't need for nothing. Because as y'all asked me this once before, you asked me, is there ever enough? Yes, there is enough. When your standard of living is covered and you have extra money left over to entertain yourself, where you're not living from paycheck to paycheck, you got a little bit of spending money, some discretionary capital to deal with, that's when you can quit. So if you got a $60,000 a year lifestyle, you just need $60,000 a month worth of dividend distributions. If you have a $70,000 worth of dividend distribution where you got $10,000 a year to spend to go travel with and stuff like that, and your $60,000 a year lifestyle is paid for, and you got to think about, if you own everything, what exactly are you paying for? Because you don't have car notes, you don't have a mortgage, so you really ain't got that much stuff to pay for. So if you own the house and you own the car, and all you got is the lights, water, and the car insurance, and the cell phone, what all is you paying for? Because you shouldn't have that much expensive bill. So really, your cost of living after you own everything should really only be about $24,000 a month. I mean, $24,000 a year. So if you're paying $24,000 a year for the residual rollover monthly bills that has to be taken care of and everything else that you own, then $60,000 a year is a lot of money, because you're gonna have $40,000 extra dollars, $36,000 extra dollars that you don't need. Because your utility bills and car insurance and stuff like all that stuff is taken care of, and you own everything else. Which means that you got $40,000 to take $20,000 and reinvest it back into a stock option, take $20,000 and travel around the world with, making more money than what you had before. And that's when you can quit, technically. So it's not like, oh, I got to be a multimillionaire. I just got to not be broke. I got to not have to look at my money, look at my due date, and call my homie and say, hey, can you loan me some money for a few days? That's all I got to. If I can stop doing that, I'm good. And I know that a lot of people need to have that mentality. If I could just get myself to a point where I don't have to ask somebody else for a handout, if I can get myself to a point where I don't have to put extra effort into making ends meet, if I could just get myself to a point where I know I'm good, even if I'm not here, that the people that matter to me are good if I'm taking care of folks, even if I'm not here, that's when I stop. That's when I stop. You don't keep going until you drop. Yeah, that's what Rev was talking about the other day. That's what we was talking about the other day, because you asked me that. You asked me when is a good time to stop? The good time to stop when you don't need nothing else. And see, there's a difference between needing something else and wanting more. If you don't need more, that's when you can stop. You want more, you're going to keep going, but you don't have to keep going. You can stop when you got everything that you need. And if you got a little bit more than what you need so that you can put some away in case the stock market crash, you do that. But If you living off of 24K and you got 60K, you don't need nothing else. You don't got to be Donald Trump rich to stop. You can stop with that. And if that is 10%, if you getting 60,000 on 10%, that's 600,000. And we doing 22% interest right now. So at 20% interest, that's 300,000. And I told you that y'all could put 40,000 a year aside if you got a two family income, and one of y'all paycheck go on the stocks and the other one paycheck go on the standard of living, and y'all put 40,000 away. That 10 years, you got 40,000. And if you're getting 20% interest off of 40,000, that's it would be 400,000 you would have in 10 years if you put away 40,000 a year for 10 years. It'd be more than that because you start talking about compound interest, but just the principle. So you have 400,000 in 10 years, right? And 10% interest would be giving you 40,000 a year, but 20% interest would be giving you 80,000 a year. So really, you would only have to put away that quantity of capital for a short period of time, a decade, and then you could quit working because your standard of living is less than 40,000 a year. Because if you making 40 or 50, your partner's making 40 or 50, y'all put y'all money together, y'all pay for y'all standard of living, put the other 40 up. You didn't need that 40. And now that 40 is making 80 back. If y'all was living on 60 and y'all getting back 80, y'all got $20,000 extra. And that's when you quit. That's when you quit. $400,000. That's when you quit. $400,000 in stocks. $500,000 in stocks. $1 million in stocks. That's when you can quit. $2 million in stocks. That's when you can quit. But it depends on how much you put up over time. If you only putting up a couple $100 at a time, you might be doing this for a while. If you putting a few $1,000s at a time, it's going to be a lot shorter. Because I told you guys before that you could put away $100 at a time for 47 years and you can make it. But if you're 30 right now, you're going to be 78. You're going to have to do different. You're going to do different. But if you could put it up, if you could put up a little bit to at least cover the difference, then you can put more in. And that's why I want you to do cash stocks, because if you put up $40,000 a year for 10 years of just principal, you might see with annual 10% added to it, you might see yourself at $500,000 or 600,000. If you got almost 20% added to it, you might see yourself at 600 or 700,000 by putting away 40,000 at a time, which means that in 10 years, you would be making 120,000 a year's payback. So if you live in a $50,000 a year lifestyle and you put away 40 grand, you'll be making in 10 years, you'll be making $120,000 a year. Nobody can tell me that they're working on the type of job where they can stay there for 10 years and make $130,000 without having to do back-breaking labor and 60 hours of overtime. Nobody can tell me that. But I can show you 15 more stocks. I showed you like 47 of them today. I can show you 15 more stocks, 15 more ETFs that you could buy into and hold them bitches for 10 years, and you'll be a millionaire. A $750,000 millionaire, son. So with that being said, I'm going to run up out of here because I got to get ready for the next thing I got going on. And I got back-to-back stuff too, so I got to get an early start. So I'm gonna tiptoe up out of here. I really appreciate y'all coming to the show. Again, ladies, as long as the situation don't make sense, I'm gonna ask you one more time to make it make sense, ladies. And fellas, I really appreciate y'all. Special shout out to Bayside, Usman Rev, Mr. Satellite, Reese Martinez, Max Opposer. I really appreciate you guys for coming to the show. Red Void, Danny Stephan, I really appreciate you guys for showing us love on a daily basis. Stay tuned tomorrow because we got some stuff we're going to be talking about making money for us in Ukraine, and they're going to blacklist us on that one too. They red flagged me for talking about Ethiopia. They're going to red flag me again for talking about Ukraine. I don't care. Fuck it. They ain't paying me no way. They take half of what y'all give me. So either way, appreciate you, Rev. I'm gonna see you tomorrow. So thank you guys for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. I'm gonna see you guys tomorrow night.
My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. I'm not landing on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.